So we have to discuss Palantir stock and taking some profits, or maybe even taking all the money off the table, because we're up over 200% just this year. And that, my friends, is almost a decade's worth of gains in just 1 year. So honestly, it's prudent to take money off the table, right? So let's discuss this topic in depth today, right after you hit that like button, if you guys like getting the truth on topics just like this. So a lot of you guys out there are up massively on Palantir. As a matter of fact, I actually bought Palantir 24 times last year, with more than half of those buys being kind of in between the $6 and $7 range. So I'm sitting on a ton of shares that are up 200 to 300% so far, which, if you want to see all my buys in real time, the biggest discount ever that has a limited number of spots is available right now for my group, where you can see my buys in Palantir in the sevens in real time. You can see my watch list complete with price targets. You can take 5 courses for free, use our stock analyzer tool for free, talk to me, slide into my DMs, jump on our live Q&As that we do every single week, be a part of the best 6, 7, and 8-figure Discord out there, and so much more, guys. There's no group out there that has more for the price than our group does. But the Black Friday sale is ending this weekend and there are limited spots, so make sure you check out the pinned comment down there and lock in your spot before it goes away forever. All right, so we're gonna go over the 4 key points to this discussion. Then I'll give you the 2 scenarios where I would absolutely sell a stock, and then we'll discuss Palantir and exactly what I'm doing with Palantir, if I'm selling or not, or how much am I gonna sell and trim off the position. Whatever the case is, we'll get to that too. So key point number 1 is, taking profits or trimming is a trader's move. Look, guys, almost every time when you hear somebody, I know exactly when you're talking about trimming, positions or taking profits or something else of that nature, you are discussing trading concepts, not long-term buy and hold concepts. And that's exactly what we discuss here on this channel. I'm a long-term buy and hold investor, so I'm not interested in trading the stock. Now, I'm not saying trading is wrong or anything else like that, but whenever I hear folks tell me, hey, I'm a long-term buy and hold investor, but I'm thinking about trimming this position, or I'm thinking about rebalancing my portfolio and all kinds of other things like that, those are trading concepts. Those are hedge fund concepts. Those are folks that run ETFs and other funds. They have to do those sorts of games. As a long-term buy and hold investor, those are games that long-term buy and hold investors typically don't play. And when they do play those, they're planned ahead of time. Yes, I sometimes will swing trade, but it's a planned swing trade, meaning that I have a defined entry point and then I have a defined exit point, and I exit the trade at that stage. It has nothing to do with wanting to hold the stock long-term. I don't want to hold the stock long-term, so I don't care if after I sell it, it runs up more, or if it craters down more, or anything else like that. Totally irrelevant to me, because I was just simply trading that stock. So anytime I hear somebody trimming a position, I think, wow, that's definitely somebody talking about a trading thing. And I'm sorry, most folks on YouTube are actually traders. Now, it's not all of them, but even some of the long-term buy and hold investors from 2 years ago, all last year and this year, are now magically traders. Most people that go on CNBC, matter of fact, all of them are traders for the most part. Most folks who write articles are traders for the most part. And anything coming out of Wall Street or on CNBC or anything else is coming from a trader's perspective. Kramer is a trader. All those folks are traders. So when they discuss, trimming positions or taking profits or whatever the case is, those are all trading concepts. Again, nothing wrong with any of that, but you have to understand that's not what long-term buy and hold investors do. And this all kind of rolls perfectly into key point number 2, which is, what was your plan with the stock? So let's say you bought Palantir and you're like, man, I really believe in the future in Palantir. I believe, they're going to be at the top of the AI game in the next 5 years, maybe 10 years out. I'm a long-term buy and hold investor in this. That's your plan for that stock. Why are you now all of a sudden wanting to turn it into a trade? Again, that's okay if it was a trade from the start. That makes perfect sense to me. But a lot of folks get tempted to just take money off the table, kind of like we talked about before. And I always refer you back to, what was your plan for the stock to begin with? If it was because I love the future, Palantir, I think it is the future of AI. I think they have a huge TAM ahead of them and they have huge growth ahead of them. For me, that's my plan. My plan should be, let me identify where fair value is. And then let me obviously figure out when it's on a discount from there. And let me just continue to add shares to that, especially as they continue to execute quarter after quarter. That to me is kind of what a plan is for a stock, and kind of how I would handle this if my plan was to hold this for the next 5 or 10 years. But that's also why I harp on planning so much, because this decision is a lot easier if you can refer back to a plan in the first place, instead of kind of hearing a YouTuber talk about trading it, or maybe somebody on CNBC talking about trading it, or maybe it's just friends and family talking about trading it, whatever the case is. If you don't have a plan in the first place, all of a sudden, all those things start to sound really tempting. You start to go, gosh, maybe it is overvalued. Maybe it is on a little bit of a run here. Maybe it is overhyped. Maybe it's got a big leg to go down. Maybe you read one of those bear articles, which there is a bear case for Palantir, I agree. But maybe you read one of those and all of a sudden you're thinking, man, that's really possible. I really think that may be the way. So I need to go and get out of it now. All those questions are easily answered if you have a plan. So that's the reason why it's a key point, why I harp on it so much on this channel, because a plan prevents you whenever those ideas pop in your head. The good idea affair pops in your head with a good idea. That's where that kind of helps ground you back into, no, this is what I need to do. This is where I need to stay, which the consequences for deviating you from your plan can be massive, which leads me perfectly into point number 3, which is the right time to take profits actually ends up meaning you actually left a fortune on the table. So let's kind of illustrate it with some examples here. So obviously you guys remember when Palantir made that last dive down to $7, it just had turned profitability. Everything's looking up, but of course, Wall Street got stupid, beat it down into the $7 range again, which of course we were adding like crazy. I know a lot of you guys were too, but it got beaten down again. And then it ran back up almost over $10 again. Everybody was saying trade, get out of it. It's too far. That was actually the right move as a trader. That was what all the charts and all the graphs and all the little funny lines everybody draws all over them. That was what was telling you. That was the right trade in that particular instance. Oh yeah, and then the charts told you it was falling right back down into the $7 or $8 range to where you can pick it up again, right? Except for that's not what happened at all. And now here we are sitting at almost $20 per share. So when you made the right trade there, you missed out on another double up, which of course means now you've got to pay a lot more for Palantir than you would have had to make before. So of course you made a profit, right? Now you owe taxes on that profit. And then now you've got to pay more for Palantir. You're what, 15 bucks, 16 bucks? Now we're up close to 20. I mean, that to me is just a scenario where I don't want to be in there. And I understand that just a double up is not necessarily a fortune, I would agree, but let me kind of give you my long-term example here as well to kind of illustrate the point all the way through. So way back in 2002, when I bought my initial shares of Apple, I sold half of my small stake. It wasn't a big stake. It was just a few $1,000s. I sold half of it for a $600 profit. Let me tell you something right now, guys. I thought I was a stud. It was like a 30% gain. I thought I knew what I was doing. Man, I was going to trade my way to millions and all the other silly stuff like that. If I had just held those shares, just those little tiny group of shares there, they would be worth 7 figures today. So there is no chance on God's green earth you can tell me that I could have possibly taken that $600 profit and rinse and repeated trading it all the way up to 6 figures to today, right? There's no way I could have just continued to trade in and out and got all the moves right, got all the entry points and all the exit points right. Oh, and by the way, paid capital gains tax along the way, all the way down, which would continue to make it even harder for me to achieve that. There's no way I could have done that in the first place. On the flip side, if I would have just held on to those shares, I had to do absolutely nothing to make 7 figures except for just hold. That's it. That's all I had to do was just hold. I mean, literally don't have to pay attention to it. Don't have to look at it. I literally could have locked it in a drawer, walked away, come back, open up the drawer today, and bang, there it is. $1 million plus right there sitting for me on just a few $1,000 bet, doing absolutely nothing, because that is what great stocks do for you over the long term. Now, sure, not every stock can be that Apple, the exponential, whatever the heck you want to call it, that Senate stuff. So great. But I can guarantee you, if it was a great stock, maybe it's only worth, 200,000. Maybe it's worth 500,000. Maybe it's worth 100,000. The point being, trying to trade myself there would have been a heck of a lot harder, required a lot more effort than just buying and holding it in the first place. So a lot of times when you take that short-sighted vision of those short-term gains, you are giving up fortunes on the back end, potentially, depending upon the stock. And the fourth point, the percent you are up has nothing to do with valuation. I hear it all the time. I mean, hey, look, I'm up 40%, I'm up 50%, I'm up 100%. Man, it's got to be time to sell, right? It's got to come back down. And my answer to that is no, actually, it really doesn't have to come down, because stocks always tend to return back to fair value. So whether you're up 200%, 400%, 500%, whatever the case was, the point being, if a stock's beaten down that far, it's perfectly reasonable that it can continue to run at least until it gets back up to fair valuation. And the example of that is Meta last year. When it was down in the 80s, all of a sudden it popped up to, I got up over 100. That right there was probably the right time to actually make the trade. Thank goodness I didn't make the trade. But whenever it doubled up to 180, I heard people saying, hey, look, it's doubled up. It can't go any further, right? And I was looking at it going, well, it's still significantly undervalued, even at 180. I cared about the valuation, not about the percent that it was up. Doesn't matter how much percent you're up. It matters where you at in regards to fair valuation in the end. So don't get caught up that just because you're up double on a stock, triple on a stock, whatever the case is, that somehow magically it's overvalued because you're up by so much. That may be the case. I would agree. But you have to do a valuation on the stock so that way you know, is that actually the case or not? Because a lot of folks sold out of Meta because they thought, hey, you can't possibly get any more out of this thing. It's already doubled up. Man, now we're up over $200. Man, this is just insane. It's got to stop at some point in time. All the traders are screaming it's overbought and everything else. Well, cool, great. But now we're, way up above that level there. And to me, I could still make a case that it's maybe fair valued, maybe even a little bit undervalued at that stage. So again, the amount you're up has absolutely zero to do with the valuation. So you got to kind of separate those two things all together and not let them, kind of come together in regards to your thinking. So after having said all that, there is absolutely two scenarios where I would absolutely consider selling a big gainer. And the first is I get a big gain in a stock that I really don't have a lot of high conviction in, or it gets caught up in some sort of hype run or something else like that. Kind of like a Wall Street bets type run or something ridiculous like that. And the example I like to use is kind of like a stock like DraftKings that we just talked about the other day on this channel. I really like the stock. I really like what they are doing. But if it suddenly went on some ridiculous run to, $80 or whatever the case is, or $100, I mean, you throw it out there, that is so many years forward worth of revenue. And I don't think they're going to grow at that particular clip, that I would absolutely consider selling at that stage, not because it can't run further, not because of any other reason other than it's just so ridiculously overvalued. And my conviction in that stock is not necessarily as high as it is in a lot of other stocks that I own because they haven't proven it yet, right? They're not profitable. They're not like Palantir where they're profitable. They're not like Tesla where they're profitable, or Apple or any other stock like that. They still are kind of squarely in that speculative stage right there. And they just got caught up in some other mess altogether. That's why I kind of don't like the Wall Street bets movement, because I can't just allow my stocks to just kind of do what they're going to do and let me not worry about them anymore. It forces me to make tough decisions like that I don't necessarily want to make. I don't necessarily want to make that decision with DraftKings. I want to let management team just continue to do what they're doing, and they continue to prove it quarter in and quarter out. And we continue to see a commensurate, kind of rise in the stock price, but not such a ridiculous rise that I can't, nobody with any sort of, brain can look at it and go, oh yeah, that's definitely reasonable. No, it's caught up in some other sort of ridiculous run there. Kind of think back to 2021 during that whole hype train run right there. There was a couple stocks I bought that I thought were going to be decent stocks long term. They just ran up so ridiculously high, and I was like, it'll never be valued at this ever again. Hyliion's a good example of that. It just ran up to just stupid levels, and I was like, it's never going to be worth this ever at that stage. And so I sold it. So a scenario like that is when I would absolutely consider selling a stock. And the second scenario I would consider selling a stock is when something fundamentally changes with the company itself. This is the case with any stock that I own in my portfolio, regardless of whether it's Apple, Tesla, whatever the case is. If there is a fundamental change with the stock, meaning something actually changes the business, and I mean for the negative, not for the positive, guys, for the negative there, whether that be, basically regulation comes in and completely changes the business model, or, there's a key management team member that leaves, like kind of like a stock like Tesla, where Elon right now is the main driver of that. Man, I'd have to think real hard if all of a sudden Elon was out as the CEO. Not that Tesla can't make it long term, but that absolutely changes the trajectory of the company, and it's not out of the woods yet, kind of like a lot of other companies are, like Apple whenever Steve Jobs died. That was a much more mature company and much later in their growth stage than where Tesla is right now. So there are all different ways that you could have a fundamental change with the business itself. And if that happens, that means that the thesis that you bought the stock under and kind of the long-term thesis is now broken. And now you've got to make some tough decisions. Now, every time there's a fundamental change, it doesn't necessarily mean that I will sell, but it absolutely means I am looking very, very hard. And a lot of times there's nothing anybody could do. It isn't anybody's fault. You can't change regulation. You can't change, human behavior, or a new technology coming up and completely dethroning this thing that we thought was going to be great. We thought was going to be around here for 20 years. And all of a sudden something comes right up and everybody just goes, oh yeah, that's half the price and 3 times better. I mean, that happens. That's part of disruption. That's part of, companies and other things getting better and better and better. And at that stage, you have a fundamental change and it's time to shift out of that investment. All right, so let's get back to Palantir here and discuss, am I going to trim some of this position? Am I going to sell this position? Or what exactly am I going to do with Palantir stock? So I'm looking at Palantir, and objectively, it's a long-term hold for myself. That's exactly what my plan says. It's sitting around fair value right now, in my opinion, of course. I understand that's a bit of an aggressive valuation, but to me, it's sitting right in that range of being in fair value. Nothing has fundamentally changed with Palantir. As a matter of fact, things continue to get better for Palantir quarter after quarter after quarter. It's not caught up in any sort of Wall Street bet style run. Sure, it got caught up in some of the AI hype, but it's not like it's sitting up at like $80 per share or $100 per share, whatever the case is. It's not caught up in that style run. So for me, right now, I am just looking to hold my Palantir shares, and I'm looking to add whenever Wall Street decides to get stupid, which they could very well do. But when they decide to get stupid, I'll definitely be adding some bonus shares to build out that position even further. So I'm not selling any shares, but remember to jump all over the sale that is live right now for my group. It's the biggest discount ever. If you want to see if I ever do sell a stock, or see whenever I buy a stock, more importantly, see my watch list complete with price targets, take 5 courses for free, use our stock analyzer tool for free, be a part of the best 6, 7, and 8-figure Discord out there. I put together 3, 4, 5 videos a week just specifically for our group members there. We go live at least weekly, if not more. You can always slide into my DMs anytime. Talk to me in the Discord there. Guys, there is so much. Make sure you check out the pinned comment down there and see if our membership's right for you before the sale ends. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.